Mark Cuban says that the 401k is a no-brainer, and I want to challenge that a little bit. I want to scrutinize that and look at the pros and cons of that here on Limitless TV. All right, everybody, we're back here talking about 401ks. And, we're talking about it because it's the only real retirement plan that Americans are really taught. Sure, your tax advisor will mention IRA this, or hey, someone will tell you should invest in the stock market. But at the end of the day, we're really told, go get a job after you get your degree and put your money into a 401k. And recently, Mark Cuban, a man that I admire, I love watching him on Shark Tank. This is what he said, though, that was kind of surprising. He was comparing a 401k to savings accounts, and he said, if you have a 401k match and you're not forcing yourself to put in as much as possible, you're an idiot. Now, those are really strong words. And I got to tell you right now that on one hand, I totally agree with Mark. On another hand, I completely disagree. If you're comparing Americans who, just as a whole, are not really good at saving, then yeah, I agree with Mark. Putting money in a 401k is a really smart choice. Why? Because if we're not putting money in a 401k, we're likely also not saving our money. And as a result, what does that mean? It would be better to put money in a 401k than nothing. Why? Because hopefully you're averaging a few percent on your money, probably doing better than you are on your bank. But what I want to also talk about today is where I disagree with Mark. Because the reality is if you're putting money in a 401k, it means that you really don't have a retirement plan. Let me break it down for you. I want to talk about the difference between projected returns and actual returns. I'm going to debunk right now the number one flaw in 401k thinking that you don't get told. Because everyone's going to say, for example, oh, hey, let's talk about your projected return, and then we're going to compare it versus your actual return. And out there, let's just say, we all have been through the ups and downs, or your parents were where they were losing 50% of their money in their 401ks all in one swoop, in one moment, and then it took years to build it back up. Right now, 401ks are actually on the higher end of the cycle, and what a lot of people don't realize is we're still just catching up from our losses from years earlier. But this is what we're told. Hey, let's put money in a 401k, and let me just kind of give you a feel for the way that the numbers get misrepresented. If I have $1,000 in my 401k, and then all of a sudden, that next year I double my money. Now this doesn't really happen, but let's just say I make 100% return. Look at the percentages in the math. If I make 100% return, then that $1,000 turned into what? It turned into $2,000. And by the way, if you doubled your money in anything, you'd probably be pretty happy. But guess what happens the next year? The market really takes a dump and it goes down 50%. What's 50% of 2,000? Well, it's 1,000. Now hold the phone. I started with 1,000 and now I'm back at 1,000. But guess what they're going to say I return? If you want to take 100% up and 50% down, they're going to say that you are averaging 50% on your 401k between the 2 years. Now look at that for a minute. Remove for a moment the fact that someone's earning fees whether you make or lose money, and someone else is charging you for managing your money in this manner. Look at the fact that they're claiming a 50% return on your money when the reality is you're at the same dollar that you started with, but they're claiming it as a 50% return. These numbers get grossly misrepresented on a regular basis. And so what ends up happening is, hey, I had a great year in the stock market last year. I had a great year in my 401ks. I made 20%. And I'm thinking, great. What does that really mean? What is that 20%? And what does it mean when you actually take into account your losses and when you average that out? If you do the real math, if you do the actual math, this isn't 50%. It's you've made money and you've lost money and there are no gains. You're not up. But someone else did get rich or someone else did make money. So Mark Cuban, this idea of if you have a 401k match, if it's your only savings plan, or for those of you that like Dave Ramsey out there, yes, have some type of savings plan. And if you don't have a plan, then a 401k is a really great default. For those of you, however, that have been watching my channel for a while and you're saying, okay, Kris, well, I know that you're into this thing called real estate. Let's just do a real quick 401k analysis and compare it to what would happen if we put it into something like real estate. First of all, the 401k is sustainably tied to the market. You have no control over it. So I've got a really big problem at the end of the day with this idea that on the 401k map, I don't have control, but over my real estate, I also don't have total control, but I have a lot of control. So let's just talk about 401ks for a moment, and let's compare it to the beautiful world of real estate. Just closed on a couple of properties, made a nice little grundle of money, and I want to just talk for a moment about the differences. So I've never put money in a 401k. When I first got married, my wife, had up to, $1,000 in a 401k. And as soon as we could take it out, once we started seeing what real estate was doing, we did. And already right now, some of you may be like, well, Kris, you don't diversify? No, diversification is for people that don't know what they're doing. I will not put some money in the IRA, the stock market, or the 401k, right? I'm pretty biased because I found a strategy that works for me, and the reality is I do not have any friends that put money in a 401k and become wealthy. None. So why put your money in anything that's guaranteed not to work? With a 401k, you have no control. With real estate, you have some control. I may not be able to control what the market does when it goes up and down, but I do own this asset and I can choose the strategy of what I'm doing with it. So if you've watched some of my videos on short-term buy and holds on single-family homes, I'll take you into the very best markets around the nation where you can be earning 15, 20+%. Those are really aggressive returns. You do that for 10 years and compound it and grow that. And you can build a nice little fortune, a nice little retirement income for yourself. For some of you, if you really explode it, you can build a fantastic level of financial freedom with that model. So I've got no control here. I have some control over here. The next thing is I want to talk about speculation. My 401k, it pays me no cash flow. Now, this is a violation of one of my investment rules. If I put money into it, it should pay me. And I'm not talking about just someday. I want it to pay me now. There's no cash flow that comes in on my 401k. There are some exceptions to this rule because I will take money and invest it in business. And some businesses don't immediately pay cash flow. But ultimately, you're going to see me always investing in either real estate or business because those are the two things with ROIs big enough to give you a chance for retirement. So while I don't get a cash flow over here, guess what real estate does? Real estate pays me. And in most cases, it pays me monthly. Now, that's really important to me because if I'm actually getting paid, then I'm getting freedom dollars coming into my bank account on a monthly basis. This is a really big deal for you because you buy a property and you have a $300 a month cash flow. That's not life-changing. But $300 might cover your car payment. So you do 3-4 more deals, and now all of a sudden, guess what? Your mortgage is taken care of. Your biggest expense for the average person, when you're making $1,000 a month cash flow or $2,000 a month cash flow in real estate, you can't retire. But you know what? That's now socking away $1,000 to $2,000 a month that you can snowball into your next deal. And fast forward several years, and guess what that snowball turns into? Bigger and bigger and bigger and bigger and bigger. Cash flow is a big part of what makes that happen. And real estate is a business. It also means that when it has its downs, it'll pay for itself with that cash flow. When a 401k has downs, you may never recover from it, or you'll have to be dedicated for years to step into any kind of recovery. The next thing is that 401k for me, it has no equity, which means it can grow with time and it can expand and it can become more. But real estate, I can purchase it with equity. That's like saying I could buy a stock for $1, but now on this side of the fence, I have the ability to buy that stock for a 20% discount or for 80% of its value. Now you think about that for just a minute. That equity that you walk into creates what I call a margin of safety. So if the market tanks with a 401k, even $1, you're out. With real estate, if it goes down $1, you're not out. You actually have some built-in protection. And so that's another big difference of why I love real estate compared to a 401k model. There's another thing that I love about real estate is that I have the ability to multiply my assets. It's just not applicable here on the 401k side of the fence. What I mean by this is, as my real estate portfolio grows, I can make my real estate make babies. And I'm going to stud out my real estate. And I'm going to remove some of that equity, or I'm going to sell off a property, and I'm going to put it into additional properties so that it can expand and so that it can grow and so that it can become more. Friends, these are just some of the reasons why at the end of the day, Mark Cuban says 401k, you'd be an idiot not to participate. And I would say, if that's your only strategy for getting where you want to go in life. But if you've been subscribing to my channel, which you have done, correct? Subscribe, ring the bell. If you're a subscriber and you've been watching some of these videos, I hope that I'm waking you up to a call to go back to our original roots, the family farm, the United States Constitution, where we were taken care of when we had real estate. It's written to benefit the individuals that do. Get back to that model because it wasn't broken. It does work. I don't know how to do it with a get-rich-quick sustainable model, but I will tell you that if you'll be in it for a 10-year period of time, you can create a great deal of freedom in your life with it. So at the end of the day, friends, weigh these out, and no, I would not have both in your life. I would pull out of your 401k, I would go into real estate, because I believe that it's going to give you so much more than your 401k ever would. And that's putting your financial freedom and your financial future into your hands. This is a pretty polarizing opinion, and some of you might agree with it, some of you don't. You know what though? Go ahead and comment below. Share your thoughts, share your ideas, share your point of view, and then make sure you subscribe and ring the bell, and we'll see you on one of our next videos.